Hello everyone, welcome to our today's class when we are going to talk about Gann Theory. This is another technical analysis study, quite popular in the market and quite accurate, and we'll see through the lesson how it could be helpful for our future trading and predicting the market patterns, market trends, and generating bigger profits. Is, as I said, powerful tool. And it's based on the price and time symmetry. This is what Gann used as the main premises in creating this trading technique. So the time and basically there are three key elements that are important in this case. There are price, time, and pattern, and based on this, Gann created all the study, and we'll see through the class that it was quite successful. So let's take a look a bit more at the beginning to talk a bit about a bit more about the Gann theory. So the angles, as the one of the most popular technique among all Gann studies, basically present the past, the current, the present, and the future price action. So it's all about time as the main premise of the study. When analyzing the market, basically trader wants to know where the market has been previously, the current situation, where the current price action is moving in relation, of course, to the previous tops or bottoms, and how to use this information basically to expect and forecast the future market movements. And Gann angles are one of the studies that are quite good and accurate and could be very helpful to traders in order to predict future market movements. They are compared by trend lines, but be aware that it's not entirely true. So they can act as support and resistances, and they look like trend lines, but basically they are not. History goes back to the beginning of 20th century. Market trader and market observer and analyst William Delbert Gann delivered this study in 1935. He was born in 1878, and he passed away in 1955. And he designed several trading techniques and approaches for studying price action and charts in order to predict market behavior, and we will see that he was quite successful in these things. So he became very popular among Wall Street traders as he was mainly focusing on the commodities and the stocks. He based his forecasting methods on geometry, on the ancient mathematics, astronomy, and astrology. And he was also known for his prophecies before starting things with the markets. He predicted that abdication of German Kaiser Wilhelm II in 1918, which led to the end of the World War II. And also he wrote the book The Tunnel Through the Air in 1927, and many believe that in this book he predicted a Japanese attack on Pearl Harbor. So it's something that he did before he completely turned to the studying markets. And Gann is now known as one of the pioneers of the technical analysis. His predictions were very popular among the all traders and market participants, and they were published in his daily publications called the Supply and Demand Letter, where he was presenting his forecasts. As said, mainly he was focusing on stocks and commodity markets. Meanwhile, he wrote several books. The most popular was the book Truth, and he was highlighted basically by Wall Street as his best work. So the book Truth was Gann's best work that he made, and his popularity of his forecasts was quite high, especially due to the accuracy, as he was predicting many things and very successful in this. So he started releasing techniques that he was using. Initially, he was basically presenting only the forecasts, but later on he started publishing his techniques, how he was forecasting the prices and how it was so accurate. So he basically, it's called Gann Studies. The main point in all these studies is the market time factor, which was the cornerstone of his studies. To prove his studies and his way of analyzing the market and to test it, basically he created two trading accounts. One account had $300 and the other one 150, and after trading for a certain period of time, basically it was 3 months for the bigger account of $300 and 1 month for $150 account. The strategy that he was using proved to be extremely successful. Gann made enormous profits according to the initial deposit. So $300 account within 3 months turned into total profit of 25,000 US dollars, while the smaller account of with initial deposit of $150 for 1 month of trading generated profit of 12,000 US dollars. His huge success of course resulted in his popularity among the Wall Street traders, and he was marked as one of the best market forecasters of all time. So it's a huge success for Gann, and he further presented his predictions, how they work and how they are based, and he highlighted three key premises that everything was based on: the price, time, and pattern. This is what we mentioned at the beginning of today's class, and there are the only three factors to be considered. The second one important is the markets are cyclical in nature. So markets are basically moving in waves, as we mentioned in the previous sessions, previous classes, that there is no straight line. The market goes up and down, and these are called cycles. So whenever we saw the price within certain period of time, the price will come to the same levels regardless of moving during this period up or down. And also one of the key points is the markets are geometric in design and in function. So all these mathematical formulas could be applied on this, so it could make work easier and could make the forecasts and all the techniques workable. So with the base, with these three premises used as a base, the strategies spread through the three areas, main areas of prediction. Gann studied the price using support and resistance lines, pivot points, and angles, so to determine the direction of the price action and corrections, trends, and all these factors that are related to the price action. Time study was the next one, where he was looking for historical movements, reoccurring dates, which were caused by various natural and social means. And then he studied the patterns. He was looking for these market swings, again using trend lines and reversal patterns, so predicting what will be the next movements in the market. So his main lines, I would say, are pattern with the 45 degrees angle and the 30 degrees angle. In Gann studies, everything is to do in relation between the price and time. So the key point of all his study is how many units price will raise for the certain or given units of time. So 1 to 1 is the 45 degrees. So in other words, it's the price will raise for 1 unit for 1 unit of the price. So this is equal level between the price action and the time. And of course, lower time frame means that the price will raise. So this is the 30 degrees is 1/2, and the price will raise for 1 unit, while we'll be using 2 units of time. Of course, the faster I think will be 2 to 1, 3 to 1. Pardon, price, I do apologize, it's vice versa. The 2/1 lower time frame means that price will use 2 units. Price will use 2 units of time to increase for 1 unit, and the higher levels are 1 to 2, 1 to 3, when the price will raise at the greater speed for the same period of time unit. So we're going to see this in a while. Meanwhile, we're going to see the main premises, how he was arranging these things. So determine the time units is to study the stock or financial instrument chart and take a note of distances in which price movements occur. So basically, Gann study is based on the finding the significant low or significant high. It applies on both directions, and then start drawing so-called fan, the angles in that direction, and rearranging lines according to the angles. So we'll get a picture that will show us the speed of the price increase or decrease according to the given period of time. And the best results could be reached from using intermediate term charts and larger time frames, I would say 1 to 3 months, as they produce the optimal number of patterns, and the picture is more clear. We're going to take a look on this in a while. Then, as I said, determine the high or low from which to draw Gann lines. So you have to find significant low or high, and draw the so-called Gann angles. And this is the beginning of applying study on the chart. So then we can start using it. Is also we can use the other technical analysis tools, Fibonacci levels or pivot points, to make the study more accurate. And the Gann determined that these by analyzing charts using mathematical theories like Fibonacci, so everything should be included into the things. And now determine which pattern to use, so you can choose the lines as they are placed in the chart. So as I mentioned, they have 2 most common lines, 1 to 1 and 1 to 2. These are the 2 pictures that we saw, 45 and 30 degrees. So once we use these charts, once we put these patterns, we have the main patterns that we are going to use, and simply there are variations in the slope of the line. As 1 to 2 is half of the slope of the 1 to 1, so it's slower speed. The price needs 2 time units to raise for 1 time unit. And then simply the number refers the numbers refer to the number of units. So this is what I mentioned. And then finally draw the patterns. The direction would be either downward to sideways, right to from the right to high point, or upward from the right low to the right to the right high from the low point. And look for the patterns further down the chart. So we need to remember that this is technique based on premise that market is cyclical. So how the Gann was doing these things? I'm going to show you in the live chart how it looks So in our sample, we have a chart of monthly chart of S&P 500 index. I already draw the Gann angles, and you can see the slight red line. So there is an angle in the system, in the MT4, let's say. So you can find the trend line by angle, draw this angle, and then arrange the chart, arrange the initial line, which is 1 to 1. Gann lines have 9 lines, 4 below, 1 central, and 4 above. So basically, this is the main 145 degrees. So as we said, market action measures raise of the price by 1 unit for the equal number of time units. So one raise of 1 unit of the price is equal to the raise of the is going to it moves for during for 1 period, 1 unit of time. I do apologize. And all lines below mark the slower raise in the price, meaning that you need 2 units of time for 1 increase, 1 unit of price increase. Then this further down is 3 to 1, 4 to 1, and 8 to 1. Back to degrees, I want to show you basically the numbers, the sizes of these angles, so we can return back to the chart. So we have the central one, which marks 45 degrees. The next one, 1 to 2, is 63.75 degrees. 1 to 3 is 71.25. 1 to 4, 75 degrees, and 1 to 8 is 82.5 degrees. This is the fastest speed of increase, meaning that price rises for 8 units during 1 unit of time. And below 1 to 1, which is our main line, we have a slower speed at 26.25 degrees on 2 to 1, meaning that 2 units of time are needed for one raise, are needed for raise of 1 unit of price. Then we have 3 to 1, 18.75 degrees, 4 to 1, 15 degrees, and 8 to 1, the slowest, 7.5 degrees. And we move back to the chart, so I can show you how it is. So basically, we have our 1 to 1 line, and we have our swing chart, bar chart, that shows performance of S&P 500 on the monthly chart. We have chosen the significant low of 1st of March, beginning of March, 2009. And we follow this uptrend. So first thing that we can see, the trend is up. So we can use the trend lines here and define the uptrend. Okay, we can adjust it a bit. So the first thing is that trend is up. We can change this trend line color not to confuse us with the other things. And we have initial signal. Now, price action started at fast speed. It reached at the beginning 1 to 4, raising 4 price units for 1 period of time, and then started slowing down until it broke below the 1 to 1 line. This was the initial signal that the price could slow down further. 2 to 1 managed to stay intact, so the trend was continuing higher, so we didn't have danger of further dip that could have changed the direction of the market and signal possible reversal and continuation, most likely, of the larger downtrend. So we have the price increasing, but the pace is still below, I would say, required level. It's slower than our initial 45 degrees price, so we have steep uptrend, but at the slower than expected speed. So we will be following. Now, once the correction made another low, we draw the trend line. So we have the trend line as our initial indication that the uptrend is still in play and is still intact. So we can still count on this uptrend and adjust our positions with the prevailing direction of the market. So we are staying basically long on the uptrend. This refers to our previous classes, especially about trend lines, reversal patterns, or trend itself. When it says the trend is your friend, so stay with this friend. The trend continues up at slightly lower speed. Let's see if it comes different way. So this is a spot gold chart, again monthly. We found significant low and draw Gann angles. The price was initially at very high speed, steep ascent that moved initially above the 4-to-1 chart, 1-to-4 chart, 1-to-4 line angle, and then slowed down a bit, but stayed close to 3-to-1, 2-to-1, pardon, line, keeping signaling that the price is in high speed. A return below this line was initial signal that bulls are running out of steam and losing traction, so the market may slow down. In other words, market may correct. Every action requires reaction, so corrective action was anticipated, and we were just looking for a signal. Once the market slowed down to the main line of 45 degrees 1-to-1, we had another signal that it could slow further if it breaks lower, so we can expect a deeper correction. This is what happened. We can apply here Fibonacci retracement studies and see how much the market reversed. We had the initial negative signal on breach of 38.2% retracement of entire move. So this was our signal that something is not going well, and the market could retrace further after such a steep reaction. Usually it happens that more steep ascent results in also steep correction, and vice versa. A steep fall will result also in the steep bounce, while the gradual movements usually not, this is not the rule, result in the same grade of corrective action, unless other factors influence the market and increase the speed of corrective action. So we had initial signal of reversal on breach of 38.2% Fibonacci study, Fibonacci retracement study. We also had a signal on breach below the trend line support. So this steep trend line was supported by this trend line. Steep uptrend, pardon, was supported by this trend line, and once it was clearly broken, it was initial signal. Confirmation comes on loss of 38.2% and the break of our main line of 45 degrees 1-to-1, which resulted in further slowing of the market and the violation of support of line of 2-to-1. So the price continued to slow down through the time frames, levels, and this is a signal that the market is moving in opposite direction. We could have also drawn the fund from the upside and see how fast it was losing traction, but the market managed to stabilize above the line which marks 3-to-1. So 3-to-1 is 18.75 degrees, meaning that 1 unit of price increase was requiring 3 units of time, so slowing down the market, but the price managed to recover here and stabilize, and fresh action higher moved again back above 2-to-1 line. Price is still moving around, so we will have positive signal on breach of this line, and then again we can use the Fibonacci retracement levels to measure the grade of reversal of the down move from the top to the lowest point. So we have fun angle 2-to-1 line, 2-to-1 line here as initial resistance, and then we have just above 38.2% Fibonacci retracement. So we have quite good signals, positive signals, in case the market breaks above these lines. Again, we can use the trend lines to confirm the uptrend from the correction low, and this is giving us indication that this near-term uptrend is now in play and could extend higher. Of course, first signal from here will show reaction of the positive reaction of the market, would cause, pardon, positive reaction of the market. Recall of Fibonacci studies, repeated rejection at certain significant Fibonacci level could also result in another reversal, as the price had several rejections here, so it was unable to clearly break. Once we have breach of the Gann Angle line and 38.2% Fibonacci retracement level, we can expect a signal for a stronger advance that could result in the further extension higher and the possible renewed attack on 45 on 45 degrees line. So it's quite accurate, although it looks a bit complicated. It's not that much. Once you start practicing and using it, and you know the main points of the study, then it's much easier to handle it and get the optimal results from this study. I think this should be all for today. I don't want to confuse you more, and since there